Worried about the lighting? I'm worried more about.
Yeah.
All right, there we go. Good morning, everybody. How you doing?
If you weren't awake then, you're awake now.
That's right.
That's quite an entry.
Yeah, I added music to the intro thing. What do you think?
I like it.
It's a jam.
I want to do Flow Rider, My House.
Ooh.
And then like 9 people were like, nope, that's copyrighted. You can't do that. Can't do that.
Yeah, don't take us real fast.
Yeah.
All right. Good morning, everybody. Good morning, and welcome to the Saturday webinar. If it's your first time hopping on, welcome. We're super appreciative that you're here, and it's something that we do every week. As a matter of fact, we've been doing it every week since kind of the lockdown with COVID. So we're going on however many weeks in a row. So we've been. It's really kind of a cool thing. The format of this is any kind of questions that you have about real estate related. Throw them in the chat and we're going to answer them. And by the way, we've got some topics. But before I get there, let me introduce everybody. So the handsome man in the vest, that's Michael Perna. That's our CEO on the Perna team. The incredibly good looking in the animal print down there is Wendy Thaggart, one of our top agents. And she's super awesome. So Wendy, welcome. You're like our first guest. So
thanks. I know. How lucky am I?
Dude, how lucky are you? And then I'm Austin Pothast. I'm the director of sales on the team. With the three of us combined, this is like with our powers combined, we're, I don't even know, 20,000 real estate transactions and lots of years of real estate. So we're happy to answer any questions that you all have. So welcome and good morning. Anything on your mind, Mike, before I get going with the topic?
Dude, I was just going to say, tell Noah to build the ark because that room you're in is flooded with natural light. Look at that thing coming in from the side.
Yeah.
Yeah.
Wendy, tell us your story a little bit before I get going with the topic. So you tell us a story about getting into real estate, about being on the team, about why you're in real estate, about what the whole thing.
I grew up, my parents loved real estate. And my dad always said, never rent, always own. And we spent a lot of Sundays driving around looking at homes. And so he owned commercial real estate and helped him when they got a little bit older to sell some of their stuff. Did some changes myself, and I had bought an investment homes and got into it that way, and decided to get into the sales side. So here I am with Perna team.
Love it. Can I tell you one of the things that we get feedback on you all the time, and the number one piece of feedback that we get is how much your clients love you, and we really and I just think you care about people in a very real way. And so tell me a little bit more about that for you.
Well, you know what, people always say it doesn't feel like work if you love what you're doing. Mm-hmm. And that's exactly how I feel. I love going out. I love meeting, my clients and getting to know them, and helping them through the transaction that they're making, because it's such a big transaction. And I just feel always blessed to help these families either, whatever they're doing in their life. If they're moving up, they're getting a bigger home, their family's expanding, or if they are downsizing, or if they're moving to another area. And so it's always exciting to meet new people, and I enjoy it.
Yeah, I love it. Your clients love you. It's good stuff. All right, good. Yeah, can you bring it to my house? We can help you.
Can he hear me?
No,
Can
don't you dare do it. Don't you dare do it.
Can you hear me?
Anything to do when he's talking about pizza. Pizza. Okay.
Yeah.
So, Mike, you and I kind of talked a little bit, and Wendy, you were talking with us too, and we were talking about a topic today. And here's what we came up with: is I guess 4 pitfalls to avoid, or 4 ways to really have a perfect move. Right? 4 pitfalls to avoid a perfect move. You want to throw that up on the little text thing?
Absolutely. Let me get that going right now.
In the first one that we said, so number 1, so right, these are the 4 pitfalls to avoid, right, that could really blow up your move, right? 4 keys to timing a perfect move. Perfect. You said it way better than I was saying it. The first one is start earlier than expected. Start earlier than expected is number 1. Who wants to go? Talk about that. What does that mean to you? Wendy, what does that mean to you?
Well, on the listing side, or either side, the market's changed a little bit. Things are going fast. And so I think, you have to have your ducks in a row. You have to have, if you're buying, you need to know, you have to get your pre-approval, have all that set, talk with your lender, know what you can do financially with your offers. If you're on the listing side, having your house ready, and looking at that timeline of what you're going to need to where you need to be and how that's going to affect your family.
Yeah, I think you're dead on. One of the things that we always talk about is you can always slow it down, right? Like we can always slow down a transaction. You can't speed it up.
Yeah.
Yep.
Right. And like if you try to rush things too quickly, that's when mistakes are made. And that's anything in life, right? It's kind of like the old haircut adage. You can always don't overcut your hair because you can't tape it back on, right? But so we can always slow things down, but we can't speed things up. And so we find some of the best transactions or from a smooth transaction standpoint for a client is people that really have their ducks in a row. So I'll give an example. Like I know one of the things that you'll do sometimes is meet with a seller, Wendy, and like have a conversation with them around, hey, this is the stuff, like here's what I would do. I would paint this stuff to get top dollar. I would declutter these kind of things. Maybe you want to fix this. Hey, maybe you have certain flowers in full bloom, this time of year, so we can really time these pictures. So having a game plan together. What's up, Katie? Can be really, really, really beneficial, right?
Absolutely.
And you can always slow things down if we got the game plan together and you're like, oh, actually, I need to delay the move by a couple of months because of my kid's school or whatever it is. Like we could slow it down. But it's really hard to speed it up. Make sense?
Yep.
Mike, you got something to add on that?
And I'm going to add a little bit of an experience that we've had this week. So it is extremely hard to speed up. We've got a client that was absolutely dead set on wanting to close on Friday, which there was nothing wrong with that. And there wasn't a need to close on Friday necessarily. It was more of a desire. You know what I mean? And at the same time, we didn't get the clear to close from the loan until Thursday morning. So now we're rushing, trying to put the documents together, trying to get them out to all parties. Nobody has time to review anything. And we ended up just saying, you know what? Let's just take a breath. Let's do more of a stress-free transaction and close it on Monday.
Yep.
Right? Moving in for a couple of weeks. The sellers had just moved out and they were already gone. And just taking even those extra 2 or 3 days allowed them to review the documents, make sure everything was in order, get super comfortable with the closing package, all of it, which frankly was far better than just trying to rush out there and get that closing achieved by 2:00 on Friday.
Yeah, like real estate's like Murphy's Law, by the way. Like if it has to close on a Friday, if it has to close on a certain day, you can almost bet on the fact that it's not going to close. It's like sometimes we create this artificial anxiety around stuff, or like artificial like deadlines around things, when really it's like, if you just would have planned ahead of time and start a little bit earlier, you could avoid it. And it's like, and again, you got to keep in mind, we're talking about families. So it's like, you're trying to line up your kids move in, or maybe you've lived in your home for 30 years and like you're realizing you have more stuff than you thought, right? It's like, just take a little extra time and plan earlier. You might be thinking to yourself like, oh, I don't want to meet with an agent because we're not planning on moving for another 6 months. Like, take the meeting now so we can have a game plan together and we could
absolutely
the whole thing up. You know what I mean?
Mm-hmm.
Yep.
Difference. See, tell me how it impacts on the buyer side, Mike.
So on the buyer side, if we're we're in a very funky market where we have almost no inventory. The inventory we have is going exceptionally fast. Most of our buyers, and when I say most, I mean 80% plus at this point, are running into multiple offer situations on anything that they want to write a home on. Because if it's a great home for them, it's going to be a great home for 5 other people.
Yeah.
Right. And a lot of times they're going to be losing a couple of those to get the right one. And it could be a week to 3 weeks between great homes coming out. So one of the pitfalls I'm seeing some buyers now is look at the real estate market as if it was still 2015. Okay, I want to close on my home in 60 days, so I should probably start looking for a home today. But that's not the case, because we don't have 24 homes to show a buyer. A lot of times we have 1 to 3, sometimes 4. And that doesn't mean that they're going to be a fit either. And then if one of those are a fit, sometimes with the multiple offer situation, someone will eke us out, right? Like,
how many days are you suggesting a buyer start ahead of time?
I would say 90 to 120 days before the closing.
Yeah, 3-4 months.
So not even, and that's not even keys.
Yeah.
I would say a full 6 months before you want keys in your hand, we need to be out pounding the pavement looking for a house.
Yeah, I agree.
Yeah.
Yeah, what's interesting is we're talking to a lot of buyers right now, and they go, yeah, I want to wait till the summer. And what they don't realize is it's already summer.
Yeah.
It's already summer. What like starting now means that you're closing in July or August.
Yeah.
And
what are you seeing in the market, Wendy?
Speed it up if we need to. We could speed it up and get you into May and June, but like if you want a nice calm transaction, you're already in July, August. Yeah.
Yeah.
Absolutely.
It's wild, right? Maybe even I could even make a case for September. It's like trying to time these things out. Yeah, it's interesting. It's good.
Yeah. And I think a big concern too with people who want to sell is how are they timing their buy? If so that's another concern that sellers are having.
Yeah.
Finding that home while listing their own home.
Mm-hmm.
Yeah. I'm actually glad you brought that up. It's a perfect segue. So, by the way, good morning, everybody. This is our real estate Q&A. And so Michael Perna is our CEO, Austin Pothast, I'm the director of sales, and Wendy Thagard's one of our top agents and a fantastic agent. And this real estate Q&A, any questions that you have about real estate, make sure that you throw them in the chat. We will get to them. Right now, the topic that we're talking about is the 4 keys to having a great, to really timing your move. And so the first one that we were just talking about was starting earlier than expected on both the buy and sell side. And then number 2, so Mike, type in your little thing.
Well, hang on. I just want to say good morning, Aunt Kathy.
All right. Good morning, Aunt Kathy. Hi.
All right.
Good morning.
Number 2 is timing out the buy and sell. Timing out the buy and sell, right? So if you're selling property, timing out the buy on your next property, right? So number 2
and that's something.
Yeah.
Yeah, and that's something. And Wendy, you have done a masterful job on this. I'd love to hear your thoughts on this, because you've got multiple people just in the last couple of months that have had to find that next home and then also get rid of the current one that they have, right? And they want to maximize their investment. They want a smooth transaction. They want to make sure they find the forever home. All of those things. Tell us a little about how that's been working out with your clients.
So, if I have a listing appointment that I'm going to, some of the things that we're talking about is first getting their home ready. A little thing that I always tell my clients is, hey, take some pictures of your rooms and look at the picture. That helps you to get an idea of what you need to declutter. because that's always the thing that we're telling people, simplify your home, but you get so used to looking at it. But if you take a picture, it helps you. And then when we sit down and we talk about how we're going to time out the listing, a lot of it is having everything ready. So we're going out, we're looking at homes, we're getting an idea of where we want to be, but for the listing, we're getting the photos ready. We're having everything set in place so we can get that put on the market when they're getting close to finding that right house. The other thing we're talking about is occupancy on the back end.
Mm-hmm.
So what does that mean for my client? How is that going to happen? How much time will they have? And how can we negotiate that? So those are some of the things that we're talking about, trying to get things lined up to make a smooth transaction.
Yeah. Can you think of a story with one of your clients that you've had recently where you were able to line everything up that I'm gonna put you on the spot.
Yeah, you did put me in.
I always forget. I'm pretty quick on my feet, so I'm sorry.
And to be honest, I can think of one, and I'll throw just a quick one out there.
Yeah.
One of our agents has a buyer that was looking for that next move up home. They had their current home for 8 or 9 years. They're looking at kids now. They're looking at they want to be closer to water, all of those things, right?
Yeah.
It did take a little bit there. It took a solid 60 days to find that next property, especially being a water property. You think the market's dry. Water properties are even drier, right? Now their home was completely market ready, right? They did the cleanup, they did the decluttering, they got everything in order. And frankly, it was a great home to start with. And then they waited, and then they didn't go on the market. Now, once we secured that property for them, that next weekend we went on the market. We had roughly 30 showings in 2 days, got the offer, and we're going to avoid a double payment for them.
Yeah.
Interesting. All right. So what you did was you game planned the whole thing, right? You met with the client, you game planned the whole thing, you had it all lined up, and you were basically ready at any time to push the button, right?
Yeah.
Go live on the market. You had everything all done. And then what you did is focus on finding the house that they're going to first.
Yeah.
Once they had that locked in, then you push the button.
Yeah.
Yeah. Okay.
And that's a lot of what Wendy was talking about with, hey, let's get this thing ready, but not necessarily throw the sign in the ground, put it in the multiple listing service, start showings. Because, like with Wendy's client and our client and the other agent's client on the team, what we did not want to do was put these guys homeless.
Yep.
Yeah.
Right. And I'm very proud to say, and a friend of mine asked me this question the other day, Mike, what is, you've been doing this 20 years, you've sold over 8,000 properties, as a team. How many times have you had a client literally have to go homeless? And I said, actually zero. Our agents are phenomenal. Wendy will not let you go homeless. Austin might.
Austin might. Nice.
Sorry, get it.
Nice. It's good. Yeah, timing that buy and sell and finding that next
the other thing we're forgetting about is the coming soon. So really emphasizing that we're pre-marketing the house while we're looking and while they're getting things ready, so that when we do put it right up on the market, people already know about it.
Yeah. Agreed. And actually, here's a good comment. I'm going to bring this one up. Another good point to discuss is how this market is much different from the 2008 housing market. And, Brandon, you're exactly right. It's pretty much the inverted market, right? Because I remember 2007 and a half, 8, 9, and late 9 and going into 10, we would get a home ready, get it onto the market, make it the best it could be. At that time, because there were so many properties on the market and market times were so long, we were doing pre-inspections, we were doing pre-appraisals, we were going way above and beyond on that sale, right, to try to avoid a lot of those pitfalls. And then we just waited. And once we had that buyer secured, then we started the home searching process because and I remember this. I sold a home in Farmington Hills to a great couple. They were looking to move to Northville, and they said, well, should we look at homes? I'm like, well, I don't know how long it's going to take to sell your home. And it did take about 90 days, right? And then again, like a third of the neighborhood was on the market at the time. Yeah. Once we found the home, I showed them 25 homes in 2 days, and they picked one. That's it. Wow. And that's how it was. It was literally an in-neighborhood market to what it is today.
It's funny. Actually, I'm really glad that he brought up, Brandon, it's a great question. By the way, good morning, everybody, and welcome to the Real Estate Q&A. And so Brandon had thrown in a question about how this market is different than the 2008 housing market. And by the way, we encourage you to throw any kind of questions that you have real estate related. We'll make sure that we answer them but anyway, so we talked about kind of the 08. What's really interesting is how many people are still gun shy about real estate. It's perpetuated from 2008. Mm-hmm. It's like people hold on to that fear that the housing market is going to collapse again. Does that make sense? And what we're experiencing is something totally different. It's completely different from that in the fact that, look, home prices are rising and interest rates are great. And we simultaneously have a great seller market along with a really great environment if you're a buyer to buy. It's kind of the exact opposite. It was back in 2008, Mike, remember you would have to chase a value down. If you didn't price something appropriately, if you tried to price too high, a month later, it was worth $10,000 less, and you fall into the trap of continually chasing things down, and that's not the case here. When you market things, when you price something correctly right now, you might get 10 offers. As a matter of fact, if your home is on the market and you're not getting 10 offers, there's only one reason.
Yeah,
you're not priced appropriately. You know what I mean? It's night and day, the 2008. Versus now. Yeah. Do you find that with your clients? They still are holding on to some of that fear from 2008, Wendy?
We were just actually talking, a client had asked me, what do you think is going to happen with, foreclosures and, are we going to get flooded? Is the market going to get flooded soon with that? And Mike, I think we talked about this a couple of months ago, and it was because just the reaction from the government in 2008 and what happened this time. Money came out a lot quicker to help people. And so we're not really seeing that happening or looking to see that same situation in 2008.
I mean, this time the government wasted no time, sprung immediately into action with the payment protection program, with the a lot of employers had an immediate deposit of $1,000 per employee to try to kick the can down the road. Payment protection, which, I'll say, speaking with small business owners, a lot of these business owners, they had payment protection plan money, 2.5 months worth of wages, for those that don't know, inside of 4 weeks from when all the lockdowns were starting. So in Michigan, on March 23rd, we went into lockdown. For a lot of the small business owners I've been talking to, a lot of these guys got their money literally third week of April to middle of May, and that kept them afloat. And then they were able to keep their people employed. And even further, we've had several payment protection, or not payment protection, but we've had several stimulus payments out, which is at least help people hold on.
Yeah.
Right? Which is a lot different than it was. It took a full 2 years in that other market to begin to even put together that bailout. And not to be offensive to anyone when I say this, sorry, government, you messed it up. Because you gave all the money to the banks with no oversight. And what that resulted in was, the head of Wells Fargo having an amazing, $40 million bonus, but it didn't actually help the people that needed it. This time it was a lot different. Was it perfect? No, it will never be. But I'll definitely take what the government tried to accomplish this time over what they didn't accomplish 12 years ago.
Yeah.
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 It's funny, they got the money to us fast.
Yeah.
To businesses, to homeowners, right? It took 2 years before.
Yeah.
By that time, the damage
was It was too late.
It took a long time to dig out.
It really did, and it was a third of the size. Like it not only did it take 2 years, but the first stimulus package was literally a third of the size when it did come out.
Yeah,
it was like it wasn't working. You know what I mean? But here we are this time where we've been able to keep a lot of the families afloat, right? People can at least put food on the table. You know, the foreclosure rates, which are typically about 0.8% in any market, good, bad, or otherwise, floated up to 1.8 to 2.1%, and now they're right back down to the bottom again. To put that in context, in 2007 and 8, we were seeing as high as 6 to 8% of all homes in some stage of foreclosure in 2007, 8, and 9. 6 to 8%. Yeah. This time we were able to keep that down to 25% of that number, and we got rid of it in 4 months.
Yeah.
Huge. Yeah.
That's very interesting. Yeah.
Yeah. So what does this mean? Like, if we're going to shake this whole thing out, like all of this data and whatever, we're not going to see the downturn that I think some people expect. It's just not there.
Yeah, it's funny because we'll talk to clients. Wendy, I don't know if you're running into this. And the conversation is, well, I want to wait. Okay, well, why do you want to wait? I want to wait till home prices go down. Not the foreseeable future, bud. Yeah. All that's going to happen by waiting is home prices are going to go up and interest rates are going to go up. So the same house that you might buy for $300,000 for $1,500 a month is now going to be $330,000, and you're going to pay $1,600 a month for it. Take advantage of this stuff. It's very interesting. But yeah, good, Brandon. Thanks for asking that.
Well, we've got two interesting developments that have happened just here in the last 4 or 5 days. You know, first one is we've got a February jobs report that just came out, and second one is we've got some adjustments on the interest rate. You know, have you guys seen that a little bit?
Yep.
Yeah. What have you guys seen on that? And if not, I've got the data written down. I can throw this out there.
Yeah, I don't know the actual data. I know that the jobs report came out stronger than expected, and interest
way
rates
stronger.
Way stronger.
Yeah,
and interest rates just started ticking up a little bit.
Yep.
Yeah. So here in this past week, interest rates have ticked up an 1/8 to 1/4 of a point, and our jobs report showed a 330,000 gain.
Yep.
Yeah.
Guys, we're through this. You know, best time to buy a house is now, because what happens when the economy recovers? Exactly what we're seeing. Interest rates will begin to climb again because the Fed cannot afford to keep adding this debt and this deficit and keep interest rates artificially low forever. It's a tool in the shed to use to stave off economic disaster, and economic disaster has been staved off.
Yeah. No, you couldn't be more right. It's so Brandon's question on there. What's your point of view on buyers wanting to wait for house prices to go down? Isn't buying now versus later close to the same since April is generally linear with house prices? No. Look, there's no correlation with home prices being higher in April versus any other time of year. You see, right? There is some seasonality in Michigan, obviously, and so you see maybe some higher price points because more higher price point stuff sells, a la your lake properties and things like that, golf properties, that kind of stuff. So you see an uptick in the average closing, but the truth of the matter is, it's not like you see a peak and a trough April versus buying in September or whatever it is. He means interest rates.
Yeah, so I think the question is going to like buying now versus buying later when prices could potentially go down, but interest rates are higher. And what does that look like?
Oh yeah.
And Brandon, if I didn't clarify that correctly, let me know, please.
And then we're looking at long term at the loan. And that's the discussion I have with clients is the long term, what you're going to be paying now as opposed to if the price goes down a little bit, but interest rates are going up.
Yeah.
And that's the truth. And you're right about that because there we go. So And this is something that that Austin, you and I have dived into a couple of times.
Yeah, is this helpful, Mike, for me to pull this up?
Yeah, you know what? Go ahead. Let's go ahead and pull that up.
Give me some data.
All right, Wendy.
Yeah.
What's a purchase price for a buyer that you're working with right now? Rough amount.
300.
Excellent.
300,000. Okay. We'll do 3 different examples of 300,000. Okay, Mike, what do you want the interest rate to be? So right now, I had a client just closed at 275, so I'll put 275.
Yeah, let's use 27. And Wendy, I mean, you're a lot closer to this because you're in the trenches working with the people. And thank you for doing a great job for our clients. Is 275 still the rate of the day? Is what you're saying?
You know, I just heard as high as 3.5 from a lender.
Let's go 3.
Let's go 3. There we go. Yeah. Okay. Then let's do that same loan at 4%.
Yeah. And I see a couple questions in there, guys. We're going to get to them all. Every single one. Don't you worry.
And let's say home prices went up and interest rates went up.
Mm-hmm.
Right? All right. So scenario 1, this is today's scenario. You buy the house at 300,000. There's a 3% interest rate. Your payment on that's $1,264.81. So call it $1,265, and your total interest paid is $155. If interest rates went up by just 1%, and by the way, keep in mind, any other time in your life, if you would have gotten a 4% rate on a 30-year fixed, you would have done jumping jacks, right?
Mm-hmm.
It's a good rate. That payment goes from $1,265 to $1,432 every month for 30 years, and then look at your total interest paid. It's a $60,000 difference over the life of the loan. Now watch this. Let's pretend that you push off buying the house. You're like, hey, look, I want to push it off, and I want to wait till home prices go down, and then they don't go down, and the home goes up by 10%. So you do a $330,000 loan, and interest rates go to 4%. That home that you could have bought today for $1,265 is now $1,575. It's like a
car payment.
I was just going to say it's a Ford Focus payment higher.
Yeah.
Right? And the total interest paid goes up by what? $80,000.
Yeah.
It's a lot like the stock market, everybody. Like you can't time the stock market effectively in micro spurts, and trying to time it in macro spurts is really a fool's game, right? It's like you can't time these things. But at any rate, you've got a rising interest rate environment and a home price increasing environment. Like honest to gosh, this might be the best time. The next 6 months might be the best time to both buy and sell a house. We don't know that for a fact, right? But that's what you're looking at.
So, and putting even a fine point on it right now. So and things have changed. Americans buying and selling home patterns have changed, which is a lot of the reason why we're not seeing home values go down in any sort of cyclical cycle. So it used to be your average American would stay in a home between 6 and 7 years, right? That's what it was pre last down market. Americans are now staying in their homes much longer. We're now at an average of 11 years, right? So this means, and this is something good to know, Brandon. So this means 2 things. One, part of the reason why there's less inventory is people are just not moving as fast as they used to. They're just not. There's not. Not like that. Not like before. Before it was buy everything on credit, get the big boat, get the big car, get the big, whatever's, right? Get the big houses, all the things, and just keep up, like upsizing your life. And what the last down market taught, especially, frankly, the millennial generation and the Gen X generation is that's probably not a great idea. Let's try living within our means a little bit more, because what goes up must come down. And that's actually what's stopping what's going up from coming down. Now, if somebody were to stay in their home for the average 11 years between loan 1 and loan 2, they'd be paying $22,000 more in just payments over those 11 years, $22,000. So then the question is, if we gamble, because we know with economic recovery, interest rates go up. That is the thing we know. We know that home values are going up on a daily basis. Like, I mean, it's literally just happening before our eyes. Those are things we know. it's definitely in people's best interest to get out and into the market and see if they can secure that right home sooner rather than later.
Yeah.
Does that make sense? Yeah. And then somebody tell me I'm wrong. Somebody tell me.
By the way, we can't guarantee that, right? We can't guarantee that, but there seemingly really is some urgency around this. And by the way, that also means if you're planning on moving in 2 years, look, I got to tell you, when don't beat yourself up about that either, right? When I talk to clients, Wendy, I'm sure you say, like, price comes up, but like when people decide to move or they decide to sell or buy, look, it's for bigger reasons. They're downsizing, they're having a baby, or they want to be on a lake or golf course, or there's some kind of life event going on. So it's not all. Look, buying a home isn't all financial. I'm just saying, if you think that you're going to time this thing over the next 6 months or a year, like, you're going to lose, in my opinion.
Yeah.
Interesting. Good question. All right.
Yep. Dive a little deeper into artificially low interest rates. That's a great question. All right. Who wants to tackle that one? If not, I will.
Well, so here's the scoop. Ready? So,
This is my nerd out.
The what?
I got my nerd out. I'm ready.
You're a nerd. I'm gonna give the non-nerd answer, and then I'm gonna let Mike nerd out. Fair?
There you go.
There you go. Okay. Here's the non-nerd answer. When you look at economic policy by the government, they've got levers that they can pull, right? So it's almost like if you want to drive up spending, what you do is you lower interest rates. If you want to drive up lending, you lower interest rates. And you got to keep in mind that 70% of our economy is stuff that you and I buy, right? And so like getting money out into the economy is how quickly money is going through an economy is the definition of how healthy of an economy is, right?
Right.
What the economic policy makers will essentially do is they'll lower interest rates, they'll pull that lever so that you're incentivized to spend more, or you're incentivized to borrow more because interest rates are cheap, and then ultimately you take that borrowed money and you spend it, right? Or to get businesses cheap money so that they can drive up and get money into the hands of the people. So it's artificially low interest rates because, well, frankly, we're going through a global pandemic, and they've been artificially low for a long time because we had to get through 2008, 2009, so they lowered interest rates then. And then this happened, they lowered interest rates again. And so they're artificially low, and historically they're higher. That's what we mean by that, right? So that's the lever that they've pulled. Is that a good non-nerd answer?
That was actually more nerd than I was gonna say.
Oh, well, tell me your less nerdy nerd answer.
Okay. Basically the same thing, but just a little. I don't know. I was gonna go shorter.
Better. Okay, you do it. Go.
When the economy goes down, the government really only has three means to try to push it forward: lower interest rates, put money into the economy, and hire people. That's it. Give people paychecks through their direct hires, give people paychecks by mailing them out checks, or lower interest rates so that businesses will start taking on projects and employing people.
Yeah.
They did all three. And now we're coming out the other side of it. And just like any bad economy before, as we come out the other side, it goes up. Simply put. Yeah. So, I mean, as we come out of this, we are going to see, my prediction is we're going to see, frankly, these stimulus checks are going to come to an end. I mean, with positive job, I mean, look at the news just coming out of the Senate in the last 24 hours. Because of the jobs growth report, they trimmed down, like just that fast, 24 hours, they trimmed down the size of the stimulus package, right? Interest rates, again, jobs report, interest rates goes up. Simple enough. Because they needed to. Because if we get into this kind of hot water again 5 years from now and interest rates are still at 2.5% or 3%, there's nowhere to go.
Yeah.
Yep.
They're going to need that lever back. Yep.
Many of the younger people out there may not know how high interest rates were at one time. So
true.
This is not the norm, okay?
Yeah.
Back in my day,
tell us more.
That's right. When I used to ride a horse to work,
Oh, Wendy, you're young too. I don't know what you're talking about.
Hey, I'm just saying younger than me. But, even 6% is, a big difference in what you're going to be paying on a home.
Yeah.
In the long haul. So
big difference. Agreed.
And yes, I'm totally playing with layouts a little bit because I don't exactly know how to use the software. So I'm trying to highlight you, and it isn't.
Wendy's like, why are we super zoomed on my face? Oh my gosh.
All right. Shannon, good morning, Shannon. You're up next.
Is there a difference between getting approved by a bank versus a mortgage company? Wendy, you want this one?
Hey, I always tell my clients to talk to a couple different lenders, be it a bank, mortgage company, and ultimately you're looking for the best rate that you can get for yourself. It's about saving your cash. And so you need to talk to multiple lenders.
Yeah.
What do you think?
Not just rate, fees and all that stuff too. You're right. You get a couple of quotes, you figure out what works best for you. We have some clients that want to, they want to make sure that they use their bank because they have that relationship. Yep. That's where their money is. And we're good with that. And we have other clients that would rather work with a mortgage company because they feel like they could get a lower rate and cost. Or that mortgage company has a relationship with their agent or whatever it is. And that, by the way, that kind of stuff matters. It does. Yeah. The better relationship that we have with our mortgage people, the more smooth transaction that we can have. That way you're not having mixed up timelines and all that stuff. So it matters. The relationship matters. But I don't know. I think overall, Mike, banks are probably a little more conservative about going outside of kind of the box, and mortgage companies oftentimes can kind of put the Tetris piece together. But if you're an in the box client, the banks do a good job too.
Also, I'm gonna piggyback on that because I've got a closing coming up where two banks that wouldn't even touch the loan, right? Yeah. Another mortgage company wouldn't touch the loan, and now we've got a mortgage company in Texas that's closing the loan because they're using an extremely niche product because, between the husband and the wife, they also own a business, and because of work from home, they're operating the business out of the house. So they're actually using a business loan to purchase the home, which is, again, super nifty and out of the box. Super nifty and out of the box. And for some business owners, it's become extremely difficult to qualify for a loan right now. Those are usually the first loans that there's a major pullback on, anything that's considered more of a higher risk. Yeah. I mean, if you're working, if you're on the line at General Motors, you're pretty good and you're pretty stable for a job, right? If you're a restaurant owner right now, there are a lot of banks that won't even look at you. And so some of these niche products the brokers can get into. On
the flip side, though, it works on the other way too, Mike. Like, banks can do some lending that the mortgage lenders can't. For instance, a lot of the major banks, or a lot of the banks, have what's called security-based lending products. Mm-hmm. Meaning, if you've got a high amount of money within the institution or within investments that are managed by the institution, they'll lend to you based on the value of those investments. It's called security-based lending. Yeah. So there's ways to get into the home. Yeah,
and then a lot of times those are some of the smaller banks. Like Talmer used to do a lot of that before they were bought out. Level One used to do a lot of that before they were bought out, and now a lot of those programs have also gone away. So you really gotta check out the credit unions more or less. So if you have high net assets with that bank and a lower than normal income or a debt to income ratio that's kind of just off the charts a little bit, because it's called portfolio loans, because they're holding that loan in their portfolio, they can go by a slightly different set of guidelines than the traditional Fannie or Freddie.
Yeah, and sometimes you might pay a higher rate for that, but maybe 0.5% or something. But at the end of the day, it gets you into the house, and it's not the end of the world by any means, especially with rates this low. Yeah.
Yeah,
I think the overall picture, by the way, not to interrupt you, sorry, is like, don't give up. just because one bank or one mortgage lender says you can't get approved, like second opinion.
Absolutely.
Yeah.
I've had cases where I've had clients say that they weren't able to get approved, got them with someone else, and they were approved. So that's why I always tell my clients check with a couple different lenders. I've given them, referred them to people. Ultimately, you have to feel comfortable with who you want to work with, and then it's my job. I reach out and try to get that bridge and make that transaction smooth with whoever they are working with.
Absolutely. Absolutely. Yeah.
That actually even reminds me of another little like game changer, especially timing your move. Like, man, even something as simple in having that relationship with that mortgage company, calling the other agent, having the mortgage lender call that other agent and go, hey, look, this is a great client. We're on it. I've looked at their information. That goes a long way. There's a lot of ways there's a lot of things that we could do on behind the scenes to win clients' offers or to make sure that we protect our sellers within those relationships and those conversations. So we kind of make sure we turn over every rock. I know, Wendy, you do a great job with that. So it goes a long way, right?
Lenders are completely, they want to get the job done too. So they're happy when you ask them, hey, can you give this agent a call and let them know how solid my buyer is? Mm-hmm. They're happy to do that. You just have to ask.
Yeah.
Yeah. And that's the truth. Then you're right about that. Yeah. I think putting a nice fine point on the timing your move, the two big takeaways that if you're going to take nothing else from this, guys, remember when you're looking to purchase a property, whatever you think you need to start, like whenever you need to start looking at a home, start 60 to 90 days before that. All right. And that includes that pre-approval process and everything else. Right. We have a client 2 weeks ago that lost a house because they couldn't get a mortgage. The gentleman was a doctor. He's putting almost 50% down, right? Like there's no doubt in my mind that this guy could walk into any bank and walk out with a sack full of cash. No doubt. Yeah. And they saw the property on Saturday. He wanted to go with a specific bank, his bank, who happens to be closed on Saturday and Sunday, right? Couldn't get the pre-approval till Monday, but they stopped looking at offers on Sunday. So that was it. So yes, we wrote the offer, and yes, we tried to build them up as best we could with all the credibility in the world. And at the end of the day, the other agent came back and said, hey, I have 9 offers. 8 of them have pre-approvals. I'm not even looking at yours.
Yeah.
So that's part of the process we got to get a jump on early as well, right?
Yep.
Second takeaway is if you're a move up or move down buyer and you've got a property you got to get on the market, number one thing is we're not going to put the property on the market right away. We're going to help you find that next home first. But again, to do that, we got to start that process because it's that buy process that's elongated right now. We got to start that process a lot sooner. So if you're looking to be in before the next pool season, we should be getting some sort of an appointment set up in the next 30 days.
Yeah.
That way we can assess your home, tell you what to do that could increase value, tell you the pitfalls that will not increase value or increase value less than the cost. But more importantly, we can narrow down and weed down into where you want to be on your next home. Right. And part of that also includes we've got an amazing 8-point plan that I refuse to put online. It's not going to happen. I do not need a competitor seeing this thing because this thing is amazing. I already found homes for just 2 couples in the last week that were off market. But that plan to find these off market properties takes a little bit of time as well. And a lot of these sellers weren't necessarily expecting to sell right away. They need some extra time too. But truth be told, we've got a buyer, and I just did a video on this. We've got a buyer that it's a family of 7, and husband, wife, and 5 girls. And we were able to dig up 2, not 1, but 2 off-market opportunities because it's a unique situation. With it's a family of 7, right? 2 off-market properties that these guys had an opportunity to go and offer into the seller without competition. And these are things we can do when we have the time to do it.
Yeah. It's really interesting, Mike. Like one of the ways that we've had to pivot as a business is, look, we talk to sellers and they're like, "Hey, look, I'd move if I had somewhere to go. I'm just not sure if I'd have anywhere to go with what's going on, with lack of inventory."
Yep.
So we've had to pivot as a business, and there's some really talented people behind the scenes in our organization that have built out this program. But going in and finding off-market properties for our clients. And I do say our clients. We're not doing this for anybody. We're doing it for our clients, right? That are committed to working with us. And yeah, we've been really successful. Can you imagine having a family of 7 and busting out of the seams and having 5 daughters and losing out on offers and being stressed? Like, can you imagine how you'd feel? And if in just going above and beyond yeah, Donovan, off-market properties are best, especially in this market. That's the kind of stuff we're going above and beyond and doing for our clients.
Yeah,
with incredible success, to be honest.
And that's what you get with our team.
Yeah,
you can't. I wouldn't be able to do that kind of stuff for clients if I was on my own. It would be very hard.
Yeah, it's true. Super true. But by the way, good morning, everybody, and welcome to the real estate Q&A. We do this every week, and so the format of this is throw your questions in the chat. We make sure that we answer them. We've had some really great questions today about the market in 08. We were talking a little bit about 4 keys to timing your move. We didn't get to the other ones. 3 and 4 on those, by the way, were occupancy, and price isn't always the most important term. But any questions that you have around real estate, we'll make sure that we answer those for you. So please throw them in there. On the call, we've got Mike Perna is our CEO. I'm the director of sales, and Wendy Thagard is one of our top agents, and she's awesome. You want to talk about occupancy real quick, Wendy? Tell us about occupancy.
Sure. So what I'm telling my clients on both sides. On the buy side, I'm talking to them about here's a way to sweeten your offer by either giving occupancy if you can, or even giving some free occupancy. And we talk about their first loan payment and where that's going to fall and how we can do that without actual money coming out of their pocket. To help with that offer. Did you want to say something about that, Mike?
Nope.
Okay. And then on my listing side, we're talking about how if they have not, how we do that timing, if they have a home that we've had an offer accepted that they're going to, how we time that by using occupancy, because I don't want my clients to move twice.
Right.
So we're building in possible occupancy after closing based on, when their buy side is going to close. Or if we've listed the home and they haven't found a home yet, how we're using occupancy to kind of elongate their process to give them more time to find that home.
Yeah. So occupancy on a basic level, for those of you that don't know how occupancy works, here's how it works. Okay. So I actually just had a closing yesterday, and the gentleman, the people that I represented the buyer, and the people that we bought the home from were relocating down to Atlanta. Okay. And so that's a stressful move. They have 3 daughters. Actually 4 daughters. I mean, it's a stressful move. And so what we did is to strengthen our offers. We said, cool, here's the deal. We're going to close on it, and you're going to get your money, because most sellers need their money. You know what I mean?
Yeah.
In order to buy the next house. So we said, okay, Mr. and Mrs. Seller, you can have your money. We're going to close on it, and we're going to let you live in the house for another 30 days. So typically on a real estate transaction, if you close on a Friday, that you got to be out on Friday. And in this case, we said, look, just stay in the house for another 30 days. And the reason this is super important is it gives them the time to move out. It allowed my client to strengthen the offer and kind of time out their move. And in the meantime, he's going out and doing his measurements and ordering his couches and going to ABC Warehouse and getting his TVs and washer and dryer and getting everything lined up so that when he moves, he can just do it all at once. The sellers can take their time moving out. They can do it all at once. They have their money, and the buyers can move all at once as well. It's a great negotiating tactic. In just a convenience thing. It's like one of these occupancy to me is like a feel good human being thing. It's like, all right, let's have a great transaction and help people move. Now, oftentimes, not typically, but oftentimes there's a rent paid back by the seller back to the buyer. And oftentimes in this market, it's like, hey, look, just live here for free for 30 days. It doesn't really cost us anything. Your first house payment might be for another 45 days. So it's like, I'm not paying 2 payments anyway. Great way to time the whole thing out.
Well, and I want to add to that is Wendy really just kind of speedboated right over that point about the importance of occupancy and what could happen if we don't time and move properly. And here's the reason. Here's the reason. As a professional, that is literally one of my highest reviewed agents, period. She is so used to nailing this important piece. Sometimes she just goes over it.
Yeah.
I also want to dig in what happens when it goes wrong, because this went wrong for a couple of other agents' clients that one of them I had to get involved with just in the last 30 days. And I had to try to help this other agent out that's not even part of our brokerage because they just flubbed it badly. So let's say that you do have to do a double move, right? Where do you put all your stuff, Wendy?
In a moving storage unit.
Yeah. And what does that cost?
Yeah.
Money.
It costs a lot of money.
That's right. And then anybody shout it out. Where do you got to live? Sometimes an extended stay.
Extended stay. Yep.
That's right. And that's money.
Family couch.
Yep. And that's not only money, but it's aggravation, because now if you got 2 kids, that's 4 people living in like one room. A lot of times you've got 2 adults that are work from home. So you've got the 2 kids and the 2 adults, and they're working from home. And the aggravation level is high because the one spatula you really like and you need it is in the box in the storage thing. And so then just fight ensues, right? Fight ensues. But then you got to move the stuff out of the home and then into the next one, right? So, and guys shouted out, what do we think of for a typical moving expense for a 2,000 square foot house or a 2,500 square foot house?
Couple $1,000.
Yeah.
Yeah.
It's not nothing, you know.
And if they got to pick it up and put it down twice, they don't give you a discount because it's the same labor.
Yeah.
It doesn't matter where they put it. They can put it in storage or they can put it in the next property. But if they got to touch it a second time, they're going to charge you again another couple $1,000s. So now we're talking about a potential anywhere between $6,000 and $10,000 for just an average home. And I'm not talking about like some of the bigger ones, but let's just call it an average home, $6,000 and $10,000 of additional cost, hard cost incurred, plus the aggravation level. Yeah. And that's what happens when you don't have a professional that times your move properly.
Yeah.
Yeah.
I can't get past Wendy the Speedboat Thaggard. That's an icon over there. Wendy the Speedboat Thaggard, ladies and gentlemen.
Oh, great.
Yeah. Yeah.
Can you explain how an escalation clause works and is it working right now? Yeah, I'll tell you a story about a client that I had that actually just closed on Monday. Mm-hmm. So we were up against multiple offers, and the end of the story is they bought the house for $442,500 or $442,000, something like that. And so what we did is we started the offer at $425,000, and we said we would beat any other offer. They knew they really wanted the house, but they also didn't want to overpay for the house. They said that they would beat any offer. They started at $425,000. They beat any offer up to $480,000 by $2,500. By $2,500, they beat any offer up to $480,000. So all these multiple offers came in, and the whole thing kept on getting escalated up. And we ended up getting the house for $442,500. And if we would have just offered $480,000, that would have meant my client would have overpaid for that house by $37,500. Now, by the way, I actually think even then it would have been worth it. I think it was a really good home, and it was the perfect home for them. But that escalation clause, it served 2 functions for us. One, it got us the house, right? They really wanted the house. It was perfect for them. It got us the house. And number two, you saved them $37,500 if they would have used a less experienced agent. I got to tell you, not to put a little feather in my cap, but I felt pretty good about that. So yeah, the escalation clauses are working, and that's how they work. I don't know what else would you add to that.
Yeah.
The listing agent is going to have to provide you with that other offer. So it's not just that the agent comes back and says, "Hey, we're taking this price." So
it's called a bona fide offer. Yeah, they got to prove.
Yes.
Yep.
And again, I want to be clear. For our team and our agents like Wendy, that is our requirement. So when we're writing an escalation clause, part of that is that other agent is required to provide us the other offer, pre-approval, and copy of earnest money deposit, if it's not electronic, proving that there is that bona fide offer. Now, funny enough, on the other side, a lot of agents are not requiring it. I was helping one of our newer folks negotiate one, and we did the escalation clause, and it was on one of our listings. And it didn't include that. It didn't include any of that language. And it was like, okay, so I could just call this person up and tell them, and their escalation clause said beat by 1,000. I said, okay, great. The home is on the market at 225. I have an offer for 240. Maybe I do. I don't know. There's no burden of proof put into their clause. So again,
we're not doing that because that's unethical. But
no,
they're
like
not
we do that.
Your point, yeah, correct.
Right, like we and that's a great distinction, Austin. Like we will not go the unethical route. We won't go the lying route. We won't go the low integrity route, because over the course of 20 years, the relationships we make in this market, especially with guys like Logan. There he is, hey Logan. He made it. Great segue. It's important because relationships matter, right? Because when things do go awry, if you've got great relationship with the co-op agent on the other side, there's enough trust built in that, hey, I know Mike's going to do what he needs to do, and I know this other agent, I know Logan's going to do what he needs to do, right? We're going to get.
Yeah. One more thing I'd add to the escalation clause that I get asked every time it's used is, can you tell me what we should go up to? And I can't tell my clients what they can go up to. I will go over and over that you have to feel comfortable with buying that home at that price. So if it's listed at 400 and you're willing to go up to 450, you're going to be comfortable paying 450 for that house. So really it's something that you have to feel comfortable at the end of the day purchasing the home with that escalation clause at the highest end of it.
It's a great point. You don't want to put a client in a spot where they're feeling uncomfortable about what they're doing. Yeah. You got to go to the comfort level. It sometimes you still lose and you're like, hey, look, you put your best foot forward. We can live with that. We saw it, but we don't want you overpaying to a point where you're uncomfortable with it. Wendy, it's a great point. Yeah. It's a great point. It's good. All right. Number 4, ready? Four keys for, making sure that you time your move correctly. Number 4 is price isn't always the most important term. Ooh, I like that. This is one of the terms, but it ain't all the terms. I like it. All right, so what does that mean? What does that mean, guys?
Well, this is like a very outlandish example, but if we've got a seller that just has a lot of stuff and needs to move and has the kids and just has 25 moving pieces, and I walked up and said, hey, I'll just give you a full price cash offer today, but you have to be out by noon tomorrow. That buyer's probably not going to get the house.
Yeah.
Because somebody else could be given a very similar offer, but given 30 days of occupancy.
Yeah.
I mean, just that simple. That simple.
Yeah, there's all kinds of terms to negotiate on. There's occupancy, there's certificate of occupancies with the cities, there's timing the move, there's price, there's appraisal guarantees, are you cash, how much are you putting down on the mortgage, all of those things. And so one of the ways that we coach up a client to avoid some pitfalls, especially on the listing side, is coaching up like what's actually the strongest offer when you look at everything, and it's not always just price, right?
Yeah.
Right. I have had clients just happen to run into someone that was walking into their home to see it and spark up a conversation, and they ended up accepting that offer. It was slightly lower because they just made a connection with those buyers. And you just don't know sometimes what is going to, make that seller gravitate to one offer over another.
Oh, and you're right about that. You're right about that. That reminds me of one we did this week. I mean, it was accepted over last weekend. Yeah. Where the high offer was actually $8,000 above the offer that from our team that was accepted. I completely said that backwards.
Yes, so, it was 8,000 lower.
Our offer was 8,000 lower than the highest offer they had. They had offers up to $8,000 higher than ours, but because the agent, on the team, they followed the process, and we have a very distinct process when we're up against multiple offers to give our clients the absolute best advantage possible. The sellers appreciated it so much, they took this offer because they liked the people, but also they felt more comfortable that this one would achieve the closing necessary.
Yeah.
And the other offers that were up to 8,000 higher didn't give them that sense of comfort. So the price is one of the terms, but they've got to be comfortable that they're actually going to achieve a closing.
Yeah.
Because what does it matter? I mean, I can offer if you have a home that is, let's say, valued at 300,000, I can offer you $1 million, but if I can't get it to the closing table, what does it matter?
What does it matter?
Right.
Yeah.
Yeah. It's good. Price isn't the only thing. Yep.
Yeah.
Okay. How did we do today?
Me?
Wendy, thanks for hanging out with us.
When I talked to Mike, I said an hour? I'm going to be out here for an hour? And it flew by.
Yeah. It's like, what are we going to do? What are we going to talk about? Yeah.
It's because you're the speedboat, Wendy.
Yeah, that's right. That's right. You're not going to let that go, Austin.
Yep.
Wendy, the speedboat thing, and I love it. Yeah. Okay, we good? Any other questions, guys? Before we
all right, guys, last call. We're doing last call for questions before we close this thing up.
Name that band. Closing time. You don't have to go home, but you can't stay here.
It's not Third Eye Blind. It's not Third Eye Blind. Who is that?
Come on, really?
Green Day?
Come on.
See, now I got to Google it.
Who is it?
Semi-sonic.
I wouldn't have gotten that. I feel like I should know that.
They were a one-hit wonder. To put your mind at ease, I think they were a one-hit wonder. Anyway,
they were definitely a one-hit wonder.
Definitely a one-hit wonder.
By
the way, what's your favorite one-hit wonder song? Wendy, you got one?
I don't. Not that I can think right off the top of my head.
Is it the Macarena?
No, it is not. It is not. Okay. That is a definite not.
That's a hard no. Got it.
Yes.
Got it.
Not that I haven't danced to it before, but.
I don't remember the dance. Can you show me?
No, you can't. I don't remember the dance either.
Wait, which dance? Or which one?
Macarena?
The Macarena?
No, but great one-hit wonder. Great one-hit wonder. Oh, here we go. Now we got the comments coming in.
Iron Maiden. Nice.
A little Iron Maiden.
Ladies and gentlemen, this is the portion of the real estate Q&A where we completely
digress.
Go off the rails. Yeah. Where we completely go off the rails. What is that to do? Bobby Shmurda. What is that? I don't know what you're talking about.
I don't know that one.
I don't know about that. Anyway, all right, guys, we appreciate you. Wendy, you did an unbelievable job today. Thanks for hanging out.
Thank you for having me.
Us dummies. And Mike, great job by you. And you don't look like you slept in the office. You look great. You look regal as always. You guys, again, this is a real estate Q&A. We do it every week, 10 o'clock on Saturday morning. So throw in your questions. We're super appreciative, not only that you're here spending the time with us, but the opportunity. And we do consider it an opportunity to work with your families and help your families. And I can't even tell you how much it means to us and how good we are and making sure that we get you the best terms. And we think about every little detail about everything so that you can have a great experience. And we really appreciate you. So Mike, good job by you. Wendy, good job by you. See you guys next week, 10 a.m.
You betcha. Thank you. Good job by you as well. Enjoy the day.
See ya.